Hey guys, what's up? Alec back with the daily stock market. Obviously, the stock market is closed on Monday today. It's an observance of Labor Day. That's why we're making the Sunday stock video today on Monday, because the stock market opens up tomorrow and we want to be prepared for when the stock market opens back up. So we're going to be talking about 5 different stocks that are the most popular and in demand. I put a question out on my video on Instagram and asked you guys what are the most popular stocks that you guys want me to talk about in the video today. And you guys did respond. So let's talk about 5 different stocks, and then we'll also end the video with some cryptocurrency, because we absolutely been killing it in cryptocurrency, making a lot of money in cryptocurrency. We're up almost 54% in the past year on the stock market alone. But with cryptocurrency, we're up almost $10,000 just in the last month. So if you want to get all the cryptocurrency content and you don't want to miss out on any crypto content, I post a lot of stuff on the daily cryptocurrency, which is my crypto page. And I'm going to be separating the crypto content and the stock market content soon. So if you want to make sure that you're getting all the cryptocurrency content, make sure you're subscribed and following on Instagram on the daily cryptocurrency. Now, if you only care about the stock market, then that cryptocurrency page is not going to be for you. The daily stock market is going to be your bread and butter page. So let's talk about 5 different stocks. Let's jump right into the video. Now, the first stock that everyone wants me to talk about is an energy stock, and it's one of my favorite energy stocks. So if you ever thought about getting into an energy stock, this might be the one for you, or at least to start looking into. Now, they are down 5% in the last month, but they're up 30% in the last 3 months and 180% in the last year. This is also a Cathie Wood stock. It was down to $115 at one point, and I think that if you're patient enough, you can get in around $160, $150 per share, but this is definitely a long-term hold. All right, so here we'll actually see a summary on Enphase. Management is cautious and assured finances are in good shape. New products are coming, and it's good that management is not rushing them, proving that they are a longer-term hold. Market opportunities globally opening up, especially interest in India. So once they get into India, and if China and some other markets, that could be huge for the stock. Investment is always an interesting ride, especially when one focuses on emerging technologies and companies that are opening up in new markets. They're talking about in India. My investment in Enphase is up 40-fold, and I've recouped my initial investment 3-fold, but I still retain 90% of my initial Enphase holding. It is distorting my technology portfolio, so I've considered taking some profits on a number of occasions and may sell some more soon. But overall, when I consider the situation, I'm comfortable holding for substantial further gains. Here I provide 3 reasons why I'm comfortable holding. I sleep at night because management is very solid, which is a great thing to know about a company. As one has come to expect, the Q2 earnings transcript left me happy that things are being managed in a highly professional way. The numbers speaks for themselves. Revenue is $316 million. 2.3 million microinverters shipped. Gross margins of 40% and free cash flow of $50 million. And it beat management's financial model, 35% gross margin, 15 net OP expenses. So overall, Enphase has great fundamentals, great management, a long-term hold. And what the analysts are saying is they can see about an 18% upside on average. They're thinking it should be around $206 per share over the next year. All right, the next one that everyone wants me to talk about is SKLZ, and this is one that I'm personally have been loading up on right around $11 or $10 per share. They're up 9% in the last week, and they had a point where they shot up around 21%. Okay, so if you took some calls out on SKLZ or whatever you did, swing trade, you probably made some money. Now they're down 40% in the last 3 months, and that's why they're so attractive in my opinion, is because if you actually look at some supports and resistance here and you draw some lines, you can see that a $9 mark, they have some strong resistance right around that $9, $10 mark, and they can easily go back up to that $15, $20 mark. All right, so here we'll see a summary on SKLZ. Offers a pure play investment on growth of iGaming and mobile gaming apps. With the stock down 70% in just a matter of months, is the stock a buy? There are 2 main risks with this investment relating to profitability and customer concentration. At current levels, the stock trades with 100% potential upside if the company can continue executing on rapid growth. And obviously, anything with a potential upside of 100%, I don't care what anyone tells you, there's obviously always going to be risk involved with an investment like that. But you should definitely know that. But what we'll see is Skills is one of those stocks that have left many investors with a bad taste in their mouth, as it was one of those stocks that soared amidst the SPAC craze earlier this year. Because of that distinction, investors could be forgiven for writing Skills off as just another meme stock. SPACs have experienced a sharp decline over the last several months, with Skills experiencing a notably sharp downward decline. At current prices, investors might be able to better appreciate its growth potential in the rapid growing iGaming market. After riding the SPAC frenzy to highs around $46 per share, Skills is now trading around its original $10 SPAC price. And I think if you can get in right around $9 to $11, I think that's going to be a very good swing trade over the next 6 to 12 months. Longer term swing trade, longer term investment. Now, the next one everyone else wants me to talk about is going to be Lucid Group. And remember, this was CCIV, same stock, and Churchill Capital. Everyone remembers that stock. They switched their ticker symbol. They switched their name. Obviously, they did a SPAC. So the question is, what's going on with them? You can see they're up 4% on the day, 6% down on the week, 15% down on the month, 21% down in the last 3 months. And you can kind of see that it's pretty much a good time to buy. You know, you can see that there was so much hype, so much craze going on. It flew up how much percent? 300% in just a span of 1 month. So obviously that's why it's on the tip of everyone's tongues. They want to see if it can do a 200%, 100%, 300% growth like they have in the past. I don't think they'll have that rapid growth in the span of just 4 weeks, 1 month. But I think they can get to around $35, $40 per share if we're looking at long term. Now, Lucid, the specific thing with them, they're still a very new company, and they haven't proved basically anything yet. Their deliveries I don't even think they delivered a car yet, so you might want to look into that. And something like Tesla, they're very hard to compare to because Tesla's been around for almost 10 years now, delivering vehicles consistently. NIO's been around delivering vehicles. XPEV has been delivering vehicles. Lucid Group hasn't really been delivering vehicles yet. They're still in the beginning stages, and even at $19 per share, they still have a market cap of like $30 billion, which is almost the same market cap as like an XPEV or almost like a NIO. And they're not even at $35 per share, $40. They're at $19 per share, and they have a $30 billion market cap. So there's obviously a lot of risk with something like a Lucid. I would prefer to see them go as low as possible before buying in. I wouldn't not over leverage your position in the Lucid. You know, the next thing you know, you can hear Lucid maybe going bankrupt, or, you know, Lucid going out of business, or Lucid being bought by Tesla. Something like that can happen, and it can go positive, or it can obviously go negative. If Lucid goes bankrupt or something like that, negative. But if they get bought out by something like a Tesla, that can be very good for Lucid. So personally, I think under $20 per share is a pretty fair place to buy Lucid, and you can trade up to $25, $28 per share on a swing trade. But you should be holding for long term, because I think they are a stock that can surprise a lot of people in the next 5 years. Now, if we look at a summary on Lucid, you'll actually see that they have been making a splash in the luxury EV market sedan. If Lucid Air, the EV maker's first product, has a good reception in the market, sales could ramp up quickly, and that's a good point. So we got to really see how the first product, Lucid Air, sells. So if there's a lot of hype behind them, that could be a really good thing for the company. The September opening of the Arizona manufacturing facility to the press could create some PR buzz for Lucid and result in higher reservations. So that is important. September, they are opening. If you're a shorter term trader, you can definitely look into that. Shares of electric vehicle startup Lucid could revalue higher as the firm starts delivery of its first ever EV product, the Lucid Air. In the second half of the year, while Lucid is not established in the EV market yet, commercial success of its luxury EV sedan could drive a major revaluation of the company's shares, which I definitely agree, and that's a very good point. It's all depending on how that EV sells that's coming out very soon. a high risk versus reward situation, which I agree on. There are clear risks when investing in a company that has no established product, which I was talking about, and that lacks commercial market success. But while there are big risks with Lucid, an investment in the firm also creates the possibility for huge upside for early investors that take on a chance an innovator with a new exciting product with a growing niche, which basically sums up Lucid in a nutshell. So that wraps up the video. It did get dragged on a little bit longer. We only talked about 3 different stocks, so we'll do a part 2 tomorrow and finish this video with 3 other stocks, but I didn't want to keep you guys for too long. We're also going to talk about cryptocurrency on the daily cryptocurrency. So if you want my cryptocurrency update on the day, instead of putting it at the end of the video, I'm just going to put it on my Instagram on an IGTV. So that way you can actually get updates for cryptocurrency and we don't really have to mix, crypto and stocks. We have one page for stocks and one page for cryptocurrency. You can get all your crypto content that you want on the daily cryptocurrency and all the stock market content you want on the daily stock market. So let me know if you guys like that I am splitting them like that, and you can hyper focus on one or the other, or you could even follow both pages, which I would definitely recommend if it were me. I'm also going to be starting a close friends list for cryptocurrency. So if you want to get on my close friends list for cryptocurrency or the stock market, just reach out to the respective pages that way. All right, guys, thank you so much for subscribing and spending your holiday with me. I really do appreciate that. So I'm going to give $5 out to 5 random comments. All you got to do is leave a comment below, screenshot it, send it to me on Instagram, and you're in the giveaway for $5 for free. We've already given away about $500 last month in giveaways. Let's do another $500 this month total. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.